Ladies and gentlemen, welcome back to the channel. We're going to get into what in the world is going on in our markets. Oh my gosh, it is getting bloody out there, and there is some not so great signs of potentially more selling to come. Now, why is this applicable? Well, AMC stock was down 5.39%. It had nothing to do with AMC. Whether AMC is a good, bad stock, good or bad trade, nothing to do with any of that. Nobody cares. Everyone is selling everything. So I want to go over a couple of charts with you guys, go over the current situation in the markets as well as with AMC stock. So let's get into it. That's the intro I'm going to give you. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section if you have any, and I'm sure you probably do. After the day that we've seen today, the worst day for the S&P since March of 2023, back during the banking crisis. So it's been quite a few months, over 6 months now, since almost 6 months to the day, actually, that we have seen a down day of this much for the S&P. So number one, first thing you guys got to know is why stocks are doing this in the first place. The number one thing and number one reason why stocks are selling off is the summary of economic projections yesterday. Most of the markets projected GDP to actually come down for the Fed's estimates of 2024. This estimate of 1.5%, the increase from 1.1% to 1.5%, shows that the Fed is asleep at the wheel. They are a ghost rider at this point. They have no idea what's going on in the economy. This summary of economic projections solidified to the markets that the Fed is going to push us into a recession. The Fed is going to be far too late to acknowledge any weakness in the markets. They're going to be way too concerned over inflation, and we're going to go into a recession. That is literally why the markets are freaking out right now. That's it. That's why. Now, I think you have to some degree, be a little cautious here, because the markets overall still not bullish, obviously, after the last couple of days, but a lot of people still have this optimism out there. So what has happened recently the last couple of days, you've gotten absolutely destroyed. It would not surprise me at some point to get a bounce and for people to feel okay about the situation. Because after all, yeah, the Fed's showing we're going into recession, but when does that actually happen? Who knows? Okay. And the markets can kind of look past some of these things at points, especially when you get to this degree of being oversold as we are right now. You're not like a little oversold. You are massively oversold. I would say at least you're touching some pretty big levels, and you're actually under them. And the markets are really in no man's land right now. Like anything could happen here. We could see some huge, massive downside from here, or stocks could start to bounce. Now, on top of just the summary of economic projections, so showing the Fed is basically asleep at the wheel. The second thing that the markets are really, I guess, taking away from the Fed yesterday, along the same lines, but Fed Jerome Powell made a very particular statement. He was asked by Steve Eisman from CNBC, the guy that covers the Fed. You guys, I'm sure you know who Steve Eisman is. I don't think I'm saying his last name right. It doesn't sound right as I'm saying it. It sounds like Leisman. He asked Fed Jerome Powell basically what was the Fed's outlook on a recession or a soft landing. And Fed Jerome Powell said a soft landing is not the central bank's base case. That means that your Federal Reserve does not expect a soft landing, that they expect a recession, but yet your GDP estimates actually went up. Again, further confirmation the Fed is asleep at the wheel, and the economy is deteriorating a lot more than the Fed thinks. And that's what the markets are telling you right now. The markets are essentially selling stocks because the markets are like, hey, the economy is not doing that well. We're definitely heading into a slowdown. But the Fed is on the polar opposite spectrum of that. The Fed says the economy is going to get better. unemployment's going to stay the same and it's not going to rise. The Fed's basically not acknowledging any of the problems out there. So the risk in the markets just went up dramatically, especially when it pertains to rate cuts. The Fed was previously expecting 4.6% interest rates by 2024. That showed, hey, the Fed will acknowledge in 2024 they have done enough, they have raised rates enough, they're going to bring down the federal funds rate and be vigilant on the economy as well. Well, now the Fed expects 5.1% interest rates by the end of 2024. This shows the Fed is not taking any vigilance to the markets, to the economy, to nothing, basically. Nothing. They don't care what happens. That's a dangerous situation to be in. Now, let's take a look at a couple charts before we dive into specific AMC data that you need to know. Number one, let's start with the S&P 500. Now, your 50, 100, 200-day moving averages. Those are your big moving averages that a lot of trading algorithms trade off of, that, you know, a lot of buy and sell orders come in at. Well, your 50-day moving average way up here at 445. You're well under that. Your 100-day moving average is at 434.66. You are actually above that today. And you didn't close around that, slightly, you know, under. You fell big time today. Down to 431, or we're technically at 430.86 here in after hours. So you completely blew past the 100-day moving average. The problem is the 200-day moving average is down here at about 414, 415. That would essentially be filling the gap that we have seen since June. That's where our markets could go. That would be, for a little bit of reference here, downside from here, potentially about 4%, which doesn't sound like a lot, but when you're just recently, we're up here at about 450 on the S&P. That's total downside of about 8%. Quite a bit of downside, and I do think around these levels, investors are going to say, hey, we should wait and see if a recession actually does happen. Now, if you look at other charts like the NASDAQ was down big time today, over 2%, including the move here in after hours. Same story with the 100-day moving average. You didn't close around this. You gapped under this. I mean, you're way under this. Okay? On a relative basis. So you didn't find support at your 100-day moving average. Next stop could be the 200-day moving average. And again, on the NASDAQ from here, that would be a drop of about 8.5%. 8.5%. Down to 327. That would be a really rough day. Let's call it that. A rough couple of days for the NASDAQ. And that's because we have just rallied so aggressively. This whole rally, basically from here, from April until where we are now, the markets had priced out a recession. The markets had said, hey, we're expecting rate cuts. We think the Fed's going to be vigilant. We think the Fed is going to help the economy avoid a recession. So investors bid up the NASDAQ 21% from June. That's not from the lows. From the lows, it gets a lot scarier. From the lows to the peak, the NASDAQ was up, you get this? 50%. 50. You got to be giving me a break here. So off of the highs of this year, you're currently down about 7.5%. 3 more percent from here, you're going to be in a technical correction around 348 on the QQQ. You could easily fall to that 200-day moving average. That would be a drop of about 16% off of the highs. That's a pretty ugly move. But really around these 50, 100, 200-day moving averages, you get a lot of algorithms that come in that start to place their trades. Hundreds of millions of dollars worth of trades. A lot of stop losses start to kick in around 5% down as well. So if we mark the highs to where we are now, you're down about 7.5%. 5% was back here what you seen yesterday. So throughout yesterday and now today, a lot of your stop losses have kicked in, and you don't know when it's going to stop. That's the problem. You are basically in no man's land. There's a huge gap that would take the NASDAQ down to, again, about 323, and you are at 357. It doesn't sound too crazy, but on a percentage basis, I mean, that's still 8.5% down from here. So there could be a lot more potential selling to go. Look at the most important stock for our markets, Nvidia. If Nvidia can't hold their moving average, nobody can. Nvidia's 100-day moving average is at $411. It looks a little bit better on a relative basis. You're only under your moving average by about $1. Okay, almost $2. Nvidia is at $409.36. Not great. Not great at all. Because especially with Nvidia, I mean, you straight up gapped from May until, where we were now. You essentially went from $320 per share all the way up to about $420 a share. You broke this 100-day moving average on the downside. You could continue to fall under 400. You could break down to about 365 to fill that gap. Maybe 375 to fill the gap. That would be downside of about 9% from here. And if Nvidia falls, then the broader markets are going to fall. If Nvidia does not do well, nothing is essentially going to do well, especially in regards to technology. So there's a lot of meat on the bone with the NASDAQ. There's a lot of meat on the bone with a lot of your technology stocks. This could help fuel potentially a lot more downside from here. Now, why is this important? Well, AMC stock fell 5.64% today. Not because there was any news on AMC, not because there was anything wrong with AMC. Buying AMC at these prices looks very attractive. AMC stock fell 5.5% because the markets are collapsing. That's what happened. So considering there's a lot of meat on the bone, there's a lot of profits out there, and there's a reason to sell stocks now. I mean, the Fed is pushing us into a recession. So that's ultimately what the markets care about, is a recession. When it comes down to it, when you boil everything down to everything, why did stocks sell off in 2022? Recession, or recession fears. Why are stocks selling off now? Recession fears. AMC stock, I don't know if it's going to inverse the markets. I don't know if AMC is going to say, yeah, screw the markets, we're going higher. It's possible. We've seen it before. We've seen it happen. It wouldn't surprise me all too much. But what we've seen today, and what we've seen recently, is AMC stock has fell as the markets have fallen. Now, I think AMC in a weird way could kind of be like a hideout here, because AMC is probably going to do better than the broader markets, I would argue, because the stock has fallen a lot recently compared to some of these other stocks that we are going over here in this video. But that's not a guarantee. So AMC stock is up 0.5% here in after hours. That's great. The MACD looks great. As long as, everything doesn't collapse even further and AMC stock continues to sell off, that looks good as well. The RSI is at 27.22, so it's on the oversold side. Not too bad, but still on the oversold side. You've been on the oversold side since August 22nd, so nothing is really new here, I would definitely argue. So with that being said, let's go ahead and get into some of this other data. First and foremost, I do want to look at oil. Oil was up today. Oil was actually up today. Now, if you look at the actual chart here, it looks like oil futures are now dropping. Even oil got slapped in the face towards the end of the day today. Let's go ahead and see if we can pull this up. Let's just do USO. Oil was actually up a little bit today. But usually every time actually, since World War II until today, you have always seen a jump in the price of oil before a recession. And you have seen that jump in oil. So potentially, this is just one of those things like, hey, maybe we're just seeing the jump in oil before the recession. Maybe the recession's actually happening now. What if the Fed needs to cut rates ASAP? That's a interesting concept, given we just got the summary of economic projections. You could get an emergency rate cut. Yeah, that would be something spectacular. Last time we got an emergency rate cut was on a Sunday right before COVID. That really caused markets, that's what caused markets to really sell off, was the emergency rate cuts. So those are important. Now, Treasury yields on the 2-year Treasury was up about 3 basis points today. The 10-year Treasury was up 15 basis points. The 10-year Treasury is breaking out, and some of these unrealized losses on banks' balance sheets are not great as well. And that's something to keep in mind also. The banks did not hedge out appropriately for bond yields and what could have happened to bonds, essentially. So they're in a really, really bad spot when these yields are breaking out to new highs. So also, not the greatest. So, with that being said, AMC's Ortex data. You have a short score of 67, 201 million worth of shorts in AMC. 12.47% short interest of free float. Free float out on loan at 13.07%. Shares out on loan 25.85 million. Days to cover 1.98. Cost to borrow 6.35. And utilization of 62.2. You have cost to borrow fees of 3.22% for interactive brokers. Ortex about 4.5% for the cost to borrow average. Cost to borrow max at about 10%. Cost to borrow minimum at 3.14%. So, pretty low across the board. As far as shares currently sold short, that's estimated at 24.42 million. So, quite a bit there. Let's go ahead and take a look at some of the option activity for tomorrow. $8. That's a big strike. We talked about this in the last video, but we're going to talk about it again. You have 13,500 puts that are held at the $8 put. You have 12,000 calls held at the $8 call. So this is going to be very important as well. If we do see AMC stock, for whatever reason, do well tomorrow, it's going to be great if we can get, above $8 per share. That's going to be beautiful. We'll ultimately see what happens. I wouldn't hold my breath. But that could be a big buying force for AMC stock. And then the following week, you're going to have a lot of, I wouldn't say a lot compared to this week, but you are going to have a decent amount of option activity as well that is right outside of the money. The option activity now compared to previously is comparably different because what you're seeing now is a lot of the option activity is really just right outside of the money on both sides, on the put side and on the call side. So that could drive more kind of elevated activity as well in AMC stock, guys. So when I boil all of this down, markets are in a really vulnerable spot. The fact that you are still selling off in after hours is not great. The fact that you're under your major moving averages on basically any stock you look at is not great, and this could trigger a lot more selling into year end. As I've talked about many times, September after quad witching tends to be pretty bad, and that history is holding up yet again. So we will see what happens. That's going to do it for this video. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.